Welcome to The Explainer. We're all about breaking down the big complex topics by going straight to the source material.
So, get this, on December 16th, 2025, the silver market did something it hasn't done in, well, over 5,000 years of recorded history. It absolutely shattered its all-time nominal high, hitting $66 an ounce. I mean, it just blasted past those legendary peaks from 1980 and 2011. But, and this is a big but, this record price has split the market right down the middle. While retail investors are absolutely euphoric, you see online forums just buzzing with predictions of $100, $200, even $400 silver. The professionals on Wall Street are sounding the alarm. They're using terms like violent drawdowns, which, is just Wall Street talk for a really fast, really brutal crash.
So that really brings us to the heart of the matter, doesn't it? The big question we're all asking, is $66 a rational price that's actually driven by fundamentals, or is this just a speculative mania that's about to end in total disaster? All right, let's really dig into this.
Okay, so the first big red flag that the pros are waving isn't just that the price is going up. No, it's how fast it's going up. We're talking about pure speed here. Just take a look at this chart. You can really see how compressed the timeline is. I mean, silver kicked off 2025 at a totally respectable $29 an ounce. But by December, whoa, it had more than doubled to 66. And the crazy part is, most of those explosive gains were crammed into just the last couple of months of the year.
Yeah, that's a staggering 114% gain. In market speak, that's not a healthy, steady climb. It's what they call a parabolic move. And let me tell you, when you see prices go vertical like this, it's almost always a sign of late-stage craziness, not a trend you can count on.
Look, to be fair, the bull case for silver is actually pretty compelling. I get it. You've got this surging industrial demand from things like solar panels and EVs, and on top of that, years of mining supply deficits. So the fundamentals, they seem incredibly strong. But, and this is crucial, history is just littered with examples where the story was right, but the price was, well, a complete fantasy. Remember Pets.com back in '99? The internet was going to change the world, they were right about that, but the stock's price was still completely unhinged from reality.
And here's the thing. This isn't silver's first rodeo with this kind of parabolic hype. Not by a long shot. We've actually seen this movie before, and let me tell you, the endings can be pretty terrifying.
Okay, let's rewind to 1980. You had this speculative frenzy led by the Hunt brothers. They were literally trying to corner the entire silver market. This sent the price screaming up to $50. But then, the regulators stepped in. They changed the rules on leverage, and bam, the whole market just imploded. Silver crashed 78% in just 9 weeks. Think about that.
Now, fast forward to 2011, and it's like déjà vu all over again. The pattern repeated itself almost perfectly. You see this parabolic rise heading towards $50, and then what happens? You guessed it, the exchange starts hiking margin requirements. Leveraged traders get squeezed, they're forced to sell, and the price gets sliced in half in just 5 months. It's the same script.
So you see these historical crashes? They aren't just random events. They follow this really predictable psychological pattern. A cycle of human emotion that plays out in every speculative bubble, whether we're talking about Dutch tulips centuries ago or the silver market right now.
And this slide, wow, it just maps out that emotional journey perfectly. It all starts with awareness, then it moves into enthusiasm, and then it builds to that stage of pure euphoria. That's when prices go vertical and anyone who questions it is just dismissed as a fool. Of course, that's inevitably followed by panic and then capitulation, which is where the investors who jumped in at the very top, they get completely wiped out. By the way, if you like our videos, please like, share, and subscribe to follow us so you won't miss any exciting updates.
So, this all brings us to the multi-billion-dollar question, right? For anyone in this market today, when you hear predictions of $400 silver and you see the skeptics getting shouted down online, you've got to be honest with yourself and ask, which stage of this cycle does that sound like to you?
All right, so if we assume for a minute that we are in a bubble, what's the pin that's going to pop it? Because bubbles rarely just run out of steam on their own. Nope, they're usually burst by a very specific catalyst or trigger.
Right now, the analysts are keeping a close eye on 4 main potential triggers. First up, another margin hike from the COMEX exchange, just like we saw in '80 and 2011. That's the big one. Second, a sudden strengthening of the US dollar could do it. Third, you could have large institutions just deciding, hey, we've made a ton of money, let's cash out, and start selling. And fourth, you always have the possibility of a black swan event, something totally unexpected that just kills the demand for safe haven assets.
And this quote right here, this just illustrates the risk perfectly. It comes from an analyst at BNP Paribas, who is actually bullish on silver long-term. He's targeting $100, but even he is warning his clients that the road to get there could involve violent drawdowns. I mean, when even the bulls are warning you about a potential crash, you really have to pay attention.
This table, this is maybe the most important takeaway of all. It highlights the critical difference between who survives a crash and who doesn't. You see, an investor who owns the physical metal with no debt, they can just hold on through the craziness. But a speculator who's using leverage, we're talking futures, options, that kind of thing, they're incredibly vulnerable. A sudden price drop can trigger a margin call, forcing them to sell at the absolute worst time, and yeah, leading to catastrophic losses.
So let's be super clear here. The warning from Wall Street isn't that silver is a bad long-term investment. That's not the point. It's purely an assessment of the risk right now. After a 114% parabolic run-up, the odds of a sudden, sharp, and violent correction are now extremely high. And in an environment like this, being cautious isn't the same as being bearish. It's about survival.
And so we'll leave you with this final thought to chew on. In a market where extreme volatility is pretty much a guarantee, the most important question isn't whether silver is going to hit $100 or fall back to $40. The real question is this: is your personal financial position prepared to survive the ride?